Howdy, y'all. Happy Friday. Welcome to Liberty Call. I am Raymond Dolman, your humble host. It is March 1st, 2024. Woohoo! 2 months into the year. How exciting. All right. Well, it is hope you're having a good day out there. It's a beautiful day here again in Colorado. Sun's out. It's not chilly. You can go outside without a jacket. Like I said yesterday, we'll get a little snow. I think Sunday morning, maybe a smidge, but nothing too significant. So makes me happy. Anyways, like I said, hope you're having a good day out there. If it is your first time watching Liberty Call, if you could do me a favor, give me some thumbs up, like, share, subscribe, follows, and press that notification bell. All righty. Well, let's go ahead and get on into the markets and see how they turned out. Let me refresh my screen here. Why does it still say they're open? There we go. All right. Let's go ahead and bring up the markets and see how they turned out. Looks like most of the domestic markets were in a good mood. Dow Jones was up 0.23%, 90 points, closed at 39,087. S&P 500 up 0.78%, closed at 5136. NASDAQ up 1.14% today, closed at 16,274. VIX was down 2.31% today. It's at 1309. Canada up 0.88. Brazil up 0.23. And Mexico up 0.17. And moving over to Europe, Germany was flat at 0. The UK up 0.69%. France up 0.09%. The Netherlands up 0.67%. Spain up 0.63%. Italy up 1.08%. Switzerland up 0.48%. And Portugal up 0.68%. So it looks like the UK or Germany was the only one in the European area that did not have positive returns. I mean, they didn't lose anything, but all right. Russian exchanges split today. MOEX up 0.34%. The RTSI down 0.47%. And the Asian markets, the Nikkei in Japan was up 1.92%. Australia up 0.61%. New Zealand up 1.25%. In China, the Shanghai was up 0.39%. Shenzhen Component up 1.12%. China A50 up 0.13%. DJ Shanghai up 0.47%. Same with the Hang Seng, and the Taiwan weighted was not open. All right, so those are the markets for today. Let's switch over and take a look at the markets for the week, starting out with the Dow Jones. Looks like it's going to finish the week down, even after the nice rally the last couple of days. It's going to finish the week down 0.14%. The S&P 500, it's going to finish up about 0.9%. The NASDAQ, up about 1.72. The Dow Transports down about 0.45, and the Dow Utilities down 1.92%. So of the major indexes, the Dow was the one in the red, and then the S&P up just under 1%, and the NASDAQ just under 2%. So, not too terrible for the week. So again, with all the hand-wringing going on about what's going to happen, where the market's going to go, is the Fed going to do this or that? So anyways, all right. Well, let's go ahead and move over to the economic data for the week. Starting out with initial jobless claims came in at 215,000. Forecast was 209. Last week's number was 202,000. Continuing claims came in at 1.905 million. Forecast was 1.874. Last week's number was 1.86 million. So a little bit of a tick up. When was the last time we were over 1.9 million? That was November of last year. So, and then before that, it was, got to go back a while, much further. Well, I'm at the beginning of 23, and so probably, like I said, November of last year, and then I'd have to go back way, way, way further. So we'd have to go back to, I guess, about November of 21 before it was that high again. So, all right. Next up, U.S. new home sales came in at 661,000. Forecast was 680. The previous number was 651. New home sales month over month grew at 1.5%. The forecast was 3%, and the month before was 7.2% growth. Durable goods orders month over month came in at a contraction of 6.1%. We were expecting a forecast of a contraction of 4.9. Last month's number was a contraction of 0.3. The U.S. house price index came in at 417.8. Last month's number was 417.4. So we do see that home prices do continue to climb here as of most recent months. The house price index year over year grew at a 6.6% rate. Last month's number was a 6.7. Let's see here. The consumer confidence index came in at 106.7. The forecast was 114, and last month's number was a 110.9. Gross domestic product was revised down from the headline number last month, came in at 3.2%. Last month's number was 3.3. And then obviously Q3 of last year was final number of 4.9. Personal income month over month grew at 1%. Forecast was 0.4. The previous month was 0.3%. And personal spending increased by 0.2%. Forecast was also 0.2. And last month's was a growth of 0.7. All right, so that's all the economic data for the week. Exciting stuff. Yes? No? Maybe? Yeah? Okay. All right, let's get to the market recap. U.S. stocks rise as tech bulls march on, falling Treasury yields and rising chip stocks. On Friday, U.S. stocks surged, bolstered by a decline in Treasury yields and a notable rise in chip stocks led by NVIDIA, indicating a growing demand for artificial intelligence technology. Fed Governor Christopher Waller's comments advocating for a shift toward short-term Treasuries contributed to an 11 basis point drop in the two-year Treasury yield. Additionally, weaker than expected consumer sentiment and deteriorating manufacturing activity fueled expectations of an earlier interest rate cut, further pressuring Treasury yield and boosting growth sectors like technology. Tech stocks, particularly chip manufacturers, saw a significant boost following strong quarterly results from Dell and NetApp, highlighting the increasing demand for AI-driven hardware. Dell's impressive performance, with a 28% surge in its stock price, was fueled by robust demand for AI-optimized servers, despite weakness in personal computing. Conversely, Hewlett-Packard reported softer guidance due to ongoing PC market challenges, but its stock remained resilient with a 1% rise. NetApp soared 22% on a positive outlook for 2024, driven by improving demand and new solutions targeting specific markets. However, not all sectors experienced positive momentum. Electric vehicle maker Fisker faced a significant setback, plummeting 46% after warning of financial difficulties amid declining EV demand and production issues. Who could have seen that coming? Similarly, New York Community Bank Corp saw a 25% decline after revealing material weakness, and that's in quotes, in internal controls related to loan reviews, raising concerns about its exposure to commercial real estate loans. And that's probably the next sector if I were to guess, I think commercial real estate is probably going to take it in the shorts here in the next few years, primarily because as their loans are coming due, and they have to restructure their debts, they're going to be doing it at much higher prices or much higher interest rates, which unfortunately is not going to be excellent for those who are holding those loans. All right, where were we? Where'd I go? All right, on the acquisition front, Vista Outdoor rose nearly 5% following reports of a $2.9 billion takeover offer from investment firm MNC Capital. Boeing also made headlines as it considered acquiring its supplier, Spirit Aerosystems Holdings, to address quality control issues following recent incidents involving 737 MAX jets. The move aims to restore Boeing's credibility after facing scrutiny from Federal Aviation Administration over quality control concerns. Shocking. All right. Next up, we're going to talk a little bit more about Mr. Waller's comments. This article from Zero Hedge: Gold and bonds soar as Fed Waller's hints at a QE reverse twist. So let's see what he has to say. Fed Governor Christopher Waller made significant remarks at a 2024 U.S. Monetary Policy Forum, suggesting a potential shift in the Federal Reserve's portfolio strategy. Waller emphasized the desire to reduce agency mortgage-backed securities holdings to zero and increase the proportion of shorter-dated Treasury securities. This strategic adjustment, dubbed Operation Reverse Twist, aims to lower short-term yields and steepen the yield curve. So instead of having it like the wrong way, you're going to, that's the way it should. This is the way it should look. It should go up as it, goes from left to right. And right now it's more like this, where the short end of the stick is higher than the long end. The proposal aligns with the Federal Reserve's objective to enhance control over its balance sheet and policy rate. By decreasing mortgage-backed security holdings and increasing Treasury bills, the Fed aims to align its portfolio with the overnight federal funds rate, allowing income and expenses to fluctuate in tandem with changes in the target rate or target range. Moreover, this shift could facilitate future asset purchase programs by enabling the natural runoff of short-term securities without expanding the balance sheet. Waller's comments hint at a nuanced approach to monetary policy reminiscent of the Operation Twist initiated in 2012. Despite parallels to quantitative easing, the Fed is unlikely to label this move as such to avoid sparking market speculation and confusion. The timing of Waller's remarks coincides with the Treasury's plans to increase bill issuance, presenting a symbiotic opportunity for the Fed to adjust its portfolio accordingly. Additionally, Dallas Fed Chief Lori Logan's comments suggest a potential slowdown in balance sheet reduction, further signaling a shift in Fed policy. Well, they haven't reduced it very much over the last couple years. I mean, they grew it like this and shrunk it like this. So I don't know how they could go any slower than they currently are. Market reactions to Waller's comments were notable, with yields, especially in the short end, experiencing declines, contributing to a bull sweetening of the yield curve. Furthermore, gold prices saw an acceleration, reflecting investors' concerns over potential inflationary pressures amid evolving Fed policy dynamics. The confluence of Waller's proposal, Treasury actions, and Fed officials' statements underscores a pivotal moment in monetary policy as the Fed navigates the delicate balance between fostering economic growth and managing inflationary risks. The prospects of QE reverse twist alongside potential rate hikes poses significant implications for financial markets and the broader economic stability. I'll say it again. They did not have to print all that money in 2020, and we would not be dealing with these problems right now. But, you know, it's nice to help out the lazy and poor and give them free money. But, you know, anyways. All right, last up, this comes from Mises Wire. This article is titled The Myth of National Defense Spending, and this was written by David Brady Jr. The debate over economic benefits of government spending, particularly in defense, has resurfaced with U.S. Senator Tommy Tuberville's stance against a defense package. This prompted a response from the American Enterprise Institute senior fellow Mark Thiessen, highlighting the purported economic benefits of defense spending, particularly for constituents in Alabama. However, a critical examination reveals the perceived advantages of such spending may be overstated. Advocates of increased defense spending argue that it creates jobs and stimulates economic growth by funneling government contracts to private manufacturers. I call that welfare. This is in turn believed to generate demand for goods and services, benefiting various industries and ultimately boosting the economy. Thiessen's argument extends to the notion that defense spending brings jobs to specific localities, providing incentives for legislators to support such incentives. Yeah, that's called bribing people. However, the economic ramifications of government spending, including defense appropriations, merit scrutiny. Financing such expenditures typically involves taxation or theft, borrowing or inflation, all of which impose costs on the citizenry. Taxation reduces disposable income and distorts market behavior, while borrowing entails future repayment obligations. Inflation driven by central bank interventions erodes purchasing power and disrupts market equilibrium. However, government contracts do not operate within the same framework of market-driven demand and supply. Rather than responding to consumer preferences, contractors fulfill orders dictated by government agencies, resulting in misallocation of resources away from consumer goods productions. This phenomenon, known as the public goods problem, underscores the inefficiencies inherent in government-directed spending. Yeah, I grew up in one of those communities, and all those smart people that worked at NASA could probably be using their intelligence on solving real problems as opposed to laundering money into the pockets of government contractors. Furthermore, defense spending may exacerbate distortions in the economy, diverting resources from productive sectors of military-related endeavors, while proponents argue that defense investments enhance national security. Well, I doubt that. The economic trade-offs include opportunity costs and resource misallocation warrant consideration. Again, I already talked about that. You're misallocating the resources of intelligent people who could be, again, curing cancer, inventing the flying car, whatever, you know. Having a faster Amazon delivery truck, you know, whatever it could be. In summary, while defense spending may appear beneficial on the surface, a deeper examination reveals potential drawbacks. The reliance on government allocations coupled with distortionary effects of financing mechanisms raises questions about the true economic impact of such expenditures. Instead of fostering genuine economic growth, excessive government spending risks crowding out private investment and impeding market efficiency. And, since, all these private companies, Boeing, Lockheed, all them are making all these, war materials, how can I buy an F-18? I'll take one of the, the older ones, the Charlie models. I know they're out of service, but, I know how to service them, fix them. I could probably figure out how to fly it. I remember how to start one up. So, and a few, Sidewinders and Stinger missiles. Hey, I could go and solve a lot of these problems right now. I could fly down to the border, strafe the wetbacks coming across, solve that problem. I could do it all by myself. Anyways. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information is there. I hope you have a wonderful evening, and I shall talk to you next time. Adios.